Sue.
All right, we're going to talk about 2009 and M&A activity. Will it pick up in the new year, or will things pretty much remain stagnant and tough? Joining us now to talk about that, Howard Lancer, Director of M&A and Head of Business Development at Robert W. Baird, and Roger Aguinaldo, who's the Chief Executive Officer and Publisher of M&A Advisors. Welcome to both of you. I'm going to start with you, Howard, if I could. You think that things will get done, but they will be strategic and smaller deals. Is that correct?
Absolutely. I mean, 2008 was definitely a year to forget for M&A. Deal volume was down year-to-date through November, about 38%. But what is particularly chilling is the November statistic. If you look at November 2008 versus November 2007, deal volume in the United States is down 86%, which is just a chilling number. And so as you kind of think about 2009 and where the activity is going to come from, it's really going to have to be led by the well-capitalized strategics who have enjoyed record profits in 06 and 07 and a little bit into 08 as well, that now have strong cash balances, have strong balance sheets. This is the exact opportunity they've been waiting for to go out now, acquire troubled companies or perhaps smaller rivals who have an emerging market position or an emerging technology that they've been looking to get a hold of.
Sounds logical to me, but Roger, those companies will need some financing, and that's pretty tough to get, though, right now, isn't it?
Yeah, really three things have to happen over the next year in 2009 for M&A activity to pick up. One is the credit. Banks are going to have to come back. Financing is going to have to come back. If private equity or even companies who are entering into the M&A market are going to be buying companies. The second thing is really valuations. I haven't seen valuations come down that dramatically. I think some sellers are still holding out, just making sure that they're selling at the right price. And if valuations don't come down a little bit further, you're not going to see some of the deals come about. And lastly, consumer and business confidence. That is a big part of M&A activity. Yeah. If consumers and businesses don't feel that things are right, people aren't going to buy, just whether it's buying a PlayStation 3 or buying a company.
Howard, you do say that anything connected to the consumer is taboo, but you identified a couple of areas that you think will remain active, maybe on the smaller and strategic side, and that's certain areas of technology, biotech and healthcare, and education. Why those?
Well, anything that's perceived by the market right now as any kind of touching the consumer is off limits. But those industries that we've kind of outlined are those that are perceived to be either counter-cyclical or acyclical, meaning that technology, there's always a use for certain technology in certain markets. Healthcare, people are always going to get sick, need access to good medication, high-quality care. Education, the theory being that in down markets, when people are losing their jobs, this is the time when they invest in themselves and go back to school to earn degrees that will position them when the market turns up to achieve a higher income stream. So those are the areas that we're looking for to continue to have activity.
Roger, you see it in financial services.
Yeah, well, you saw a lot of transactions happen this year, a lot in the distressed area of financial services. I think you're going to see a lot more of that next year. A lot of these banks still need to be capitalized appropriately. A lot of these financial institutions still need the capital in order to grow. So you're going to see a lot of those types of transactions, like Bank of America acquiring Countrywide a few years back, and J.P. Morgan buying Bear Stearns. You're going to be seeing a lot more of those. Maybe not in the large market deals, but maybe in the middle market.
All right, thanks, gentlemen. Appreciate it very much.
Thanks a lot.
Still following the story here with Kirk Kerkorian.